This is an update and technical analysis on First Republic Bank, a company of the financial services sector and banks and regional, here off the 5-minute interval. And in my previous video, I'd continued to emphasize the importance of this key primary hidden trend line and continue to discuss its significance. We had that reactionary high there too as well, but just to sort of see what I'm talking about here off this key inflection point, multiple reactionary highs, lows to help validate that. And I had continued to discuss its significance. And as a result, we did see that reactionary high. We put in a reactionary high amongst it and a small pop out of that crucial inflection point. So, we did pop it. I'll zoom in here. Really, what was really more significant too, I've completely altered some of these key inflection points, new key levels to watch. But really, what was really interesting was that we did break out of it. That was the most important thing, especially if you're a fast and or active day trader. You see that pop out. It pops out, took out that, additionally took out that 55-minute moving average, honed in below it. You had dual resistance, a dual line of resistance, completely popped that key inflection point and ran up to my key 1298 price resistance and was rejected right amongst that key inflection point there. So, some real quick, especially if you're active or a quick day trader, you could have gained a quick 4% on that scalp. But here we are now. We're in a key inflection point, in my opinion. We're in a primary trading range. Now we have effectively taken out that primary trend line, and we're dancing amongst this new reactionary high off the 21st of March. Reactionary primary trend line here that I like, and it looks like we may be testing it right now, right amongst into the close there. And it looked like we were going to sort of breach it. Coincides with the 55-minute moving average. So you want to see that level get taken out. It was very bullish that we took out that key inflection point there. Danced them, and we're really just in this consolidation phase in this primary trading range now, or consolidation, gearing up for its next big move. But this is all we're doing here. This is exactly what we're doing. We especially off on Monday, we opened a breakout amongst that key level. You have the 205-minute moving average hovering in up above that key 1298 price resistance. We needed to see that 1298 price resistance go. Bull traders and or dip buyers, maybe buy on a breakout, pull back, take that key inflection point out. That's going to be really big there. Big inflection point. Bull traders and dip buyers take that inflection point out, and I could suspect a quick move to the 1457 price resistance. I was a little disappointed. I thought this would have a bigger inflection move, a bigger move once taking it out. I really do believe it's still validated, especially since we had that reactionary high amongst that key inflection point and got rejected. And then the impulsiveness of that breakout, you could tell, it was definitely geared for a crucial inflection point and now taken out. So these are some key levels to watch, some key breakouts. But bear traders, short sellers, they want to see a complete breakdown. They want to see this reflected. They want to see this primary resistance, reactionary high resistance trend line reacted upon and start to finally break that new trend there. I truly believe whatever the more than likely the next underlying trend will be either very bullish breakout above or a breakish breakdown below. I mean, these are your key inflection points to watch. Another mention I forgot to point out in my previous video was the 1180 price support was defended pretty heavily. We had that last 2 days. We ended up backtesting it again. It was clearly defended there. Came back and backtested it 2 more times and was clearly defended there as well. So just a key inflection point. Bullish indicators starting to hone in and look a lot more healthier. We have already have that crossover in the moving average conversions. We're starting to flatline in this consolidation period, but I would only expect a big move to the upside if some of these key levels are taken out there. So we'll see what happens. I'll keep you updated if I see any more significance here in the charts.